Last week, we called 5 out of 8 market moves for over 600 pips. But here's the dangerous part. If you think that means this week will be just as easy, well, you're setting yourself up for failure. You see, the goal isn't to chase another 600 pips. The goal is to help you build a skill that will allow you to find high quality trading opportunities week after week, regardless of what happened the week before. Today, I'm going to show you exactly how I analyze the markets, identify high quality trading opportunities, and why consistent traders don't get scared after a winning week, but we also don't get overconfident. Because in trading, consistent analysis plus consistent execution equals consistent results. We got a lot to go over today. Check the chapter list below for a sneak peek, and let's hop in and let's learn to trade. So we're going to get started here on the pound dollar 1-day chart, and you can see a lot of bullish momentum throughout the week. I believe the pound was, the third strongest currency pair this week. Yeah, right in here. And I do think we have some ways to go to the upside. So we're going to look for a bullish opportunity here. Now, if we look left, we're going to see that price action is trading at a previous level of consolidation right in here. But if I bring on my volume profile tool and measure it from the swing high to swing low here, you're going to see that there's a little bit of a gap. We call this a void, and that the interest in the market really doesn't pick up until about $1.36. So I still think there is some room to go higher. Now, if we look deeper at this opportunity, we have a few things here. One, we just had a head and shoulders pattern that formed. You can look at this from many different ways, but we'll take a look at it from this perspective just to kind of keep things simple. We have price action retracing down, giving us our left shoulder, a move back up, giving us the start of our neckline, a move down, giving us our head, a retest of this previous level of structure right here, giving us our right neckline, and then a move down here, giving us our right shoulder before exploding up and breaking both the slanted neckline right here in the dotted line, which is, there we go, going to get that back on my screen, as well as the horizontal neckline as well, right here with that straight black line. And the head and shoulders pattern is a classic reversal pattern, and the violation of those points essentially confirms the pattern. So as a head and shoulders pattern trader, what we would now be looking for is some relief, a retracement back into our necklines, and an opportunity to go higher. And where can we go higher to? Well, that 136 even handle that I just drew out for you. Now, what's also interesting about this particular setup is that it's no coincidence that price decided to stop right here and then start retracing. And if I delete my drawing tools and draw something else on, you're going to see that we actually have an advanced pattern formation completing here as well in the form of a Cypher pattern. We have our swing high to swing low right there being our X to A. Our first retracement back up being our A to B, our extension down being our B to C. And you can see right on a dime at this level, right? If I bring on my 786, boom, we hit the completion point for a bearish Cypher pattern. Now, here's where things get even more interesting. The traditional target one for a Cypher pattern is going to be the 382 Fibonacci extension, taken from the low of my C leg to the high of my pattern completion. And if we look at that 382, that's going to come right around another even-handled number. We call these psychological numbers because as human beings, we like them because they come easy to us at the 134 even handle. So the expectation is that price is going to retrace to that level. Well, if you're a Cypher pattern trader, obviously these are going to be targets for you, but if you're someone looking for this pullback trade for the head and shoulders, this is a perfect location as we come back into our previous level of structure in that neckline right there to look for that opportunity to get long. Now, with that being said, there may be a little bit of a dilemma here, and we always have this conversation with our traders. Akil, what if I am a trader of both? What if I am a Cypher pattern trader who got short up here, but I'm also a head and shoulders trader who wants to get long down here? How do I handle that situation? And before we get into the details about that, I would say this. This is why it's so important to have a trading plan, right? I showed you what a rules-based trading plan looked like in the quiz video I shared with you guys. Well done, by the way. Many of you guys are getting like 5 out of 6. That's a very good sign. If you haven't seen it already, make sure you take that quiz. It's very interesting. But The purpose of having a rules-based trading plan is to take these situations into account. When these situations occur, there's no longer that emotional reaction. There's no longer that, oh my gosh, I'm panicking, I don't know what to do, so I'm going to make a snap decision and do this. Or, oh my God, I'm panicking and I'm fearful of this and price looks like it's doing that, I'm going to do this. Everything that we do on the chart should be per our rules. And if we don't have a rule for something, then we don't do something. Now, my rule in a situation like this is that I always stay with the initial trade that I'm in versus jumping ship and trying to get on the next trade. So I would stick with this pattern until its completion, but there's also many different ways to work around it. This isn't the time or the place to discuss that, but you want to make sure it's rules-based, whichever path you do decide on. With that being said, if you want to continue this conversation, either asking questions or perhaps share how you handle the situation, feel free to do it in the comment section below. We just have a lot of ideas to get to, so I want to keep on track as much as possible. Up next is going to be our pound yen. We've been talking about this trade for a few weeks now, and congrats to all you traders that took advantage of it. 200 plus pips straight up, no pain. Let's go. With that being said, if you're someone who didn't take the move, it's very important not to give in to that FOMO and do something that you're not supposed to do. Because right now the market is retracing, and the first thing you would say to yourself is, okay, cool, we just saw this with pound dollar. Let me hop on this retracement and ride it up to the next wave. But before we can do that, because this is a nice setup, right? Price came down, we put in a nice higher high, higher close candle. That's a good aggressive way to get into the trade to the upside. But the question we want to ask is there room to the upside? Because remember, we called that 219 level for a reason. We didn't just make it up because it sounded cool. No, we went back in time. We found a key level of structure around that area, and that's what allowed us to make that projection. Now that that level has been hit, we have to reevaluate the opportunity and see if we still believe there's room to go higher. If yes, then we can certainly involve ourselves in a trade. If no, we need to stay away and make sure we don't recklessly throw away money in the market. So in order to do this, we're going to have to go all the way back up to the weekly. And if you remember, we're going to have to go all the way back to, what was it, 2009? I think somewhere around here to find that key level of structure. You'll see it was the low side of this head and shoulders pattern right here. Devin, Beverly Ann, this is for you since I know you guys are working on head and shoulders and you want me to show as many examples as possible. There you go, right? So that initial move was right here, that initial level, I should say 219 right here. The question is, what is the next level? And I have two black lines drawn out. The next two levels I would expect to be hit would be at minimum around here at about 223.18 and at maximum about 228.71, so anywhere in that zone. So yes, the market does have room to go higher, but I would take more of a cautious approach, and that means not necessarily jumping the gun. Because what we could be seeing here is a period of exhaustion. If you guys are familiar with Dow theory or Wyckoff cycles, it's a time and true tested explanation of how the market works, right? The market goes through these phases, right? We go through phases of accumulation, which is basically consolidation, sideways movement. And then we put in these waves. I guess this is Elliott wave theory as well, but I'll keep it simple for you. We put in these waves where we have a move up, we have a retracement, we have an elongated move up, we have a retracement, we have one more shorter move up, and then the market retraces, and it looks like this is going to be just a retracement before the next move up. But what often happens is the market will either put in a complex pullback, something like this, an AB equals CD pattern, before extending up once again, or maybe it doesn't extend up again and we violate that level and retrace more to the downside. So given the run that we just had and the general cautiousness that we have to have around the yen these days because of that intervention, I would take a cautious approach where I want to see one of two things happen. If you are really interested in getting involved in the pullback, I would wait for a deep pullback. So for price action to come into this zone, maybe this does end up being a complex pullback where we get a brief retracement back up and then we end up doing something like that. The reason I like this level down here is because it's going to give you an amazing risk reward. We know that our prediction is wrong if price violates these levels. So if we're able to get involved in a trade where we get in long right there, our stop loss only needs to be down here. And we can certainly shoot for either a conservative target right back at wherever that retracement started, a little bit more aggressive target at a retest of the highs. And if you want to shoot for that extension to those higher levels that we spoke about, which I forgot what they were already, 223, I think it was. I think I deleted my stuff. I think it was 223 was the smallest one. You still have room to hold on to that position for that next move up. So that would be way number A, number one, whatever you want to call it. The second one would be waiting for a fresh break. And a fresh break would prove that the market is more likely to go in that direction. And what we need for a fresh break is this. This right here is our most recent new structure high. In order to have a fresh break, we would need a violation of that level. So price action to break and close above those highs. That would give us our fresh break right here. And then we can look for that next pullback in that extension up. So if you missed this last week, yeah, it might suck a little bit, but you don't want to make a bad situation even worse by trying to hop in late and then losing money. So wait for the market to give you clues, take advantage of those clues, and make sure it's a good trade for you. On to oil. We are back at war apparently, so oil is back in the news. And oil has made a little bit of a turnaround before that. Now, real quick, for you guys that like loss of momentum patterns and clues of when the market will be turning around, here is a perfect example right here. You can see that price action has made a pretty significant swing high to swing low. And as we get to the lower part of this move, the candles get smaller and the grade of the slope get a little bit more gradual. Well, I showed you guys the RSI in the previous video. We spoke about overbought and oversold conditions. Here is another way that you can use the RSI in the form of what's called divergences. And the simple way of explaining divergence is pretty much this. The RSI and price should theoretically be doing the same thing because the RSI measures the change in speed of movement, and that's what price does. It moves. So when the RSI and price deviate, meaning they do something different, that is like a glitch in the matrix, and it's something to pay attention to. And you can see as we come down and as the slope starts to become less steep, we can actually see as price action continues to put in lower lows, our RSI starts to put in higher lows, which is our bullish divergence. And then boom, price action starts to retrace off of that. So just wanted to throw that lesson in there. What I am looking for on oil is a potential buying opportunity. You can see we had two inside days right here, right? Two very small candles that completely within the candle in front of it, right? So they complete within the previous day's range. And as we always say, contraction, do I have something? Yeah, contraction, nope, leads to expansion. I wanted to kind of like fire a rubber band at you guys, but it didn't. I'm gonna do it anyway. Oh, crap, okay. Anyway, contraction leads to expansion. So as the market kind of gets smushed together like a spring, all that potential energy kind of is in there, and then boom, it must break out. And that's exactly what we did. As we get onto the 4-hour chart, you're going to see a nice little consolidation. Again, price action goes up. We put in this nice little consolidation pattern, this pennant pattern right here. And then price action, boom, breaks and closes to the upside. Now, we haven't done it yet, but I have a 4-step process that I do each and every time I analyze a chart. Consistent analysis plus consistent execution equals consistent results. That process is called IPDE. It stands for identify, predict, decide, execute. And it starts with identifying what price action has done. In this scenario, I identify that I have a break and close above a previous level of structure, a higher high, higher close, that allows me to predict that price action is likely to go higher. The next part of that prediction is predicting if price action is likely to go higher, where is price action likely to go higher to? And this is when I need to perform more analysis. So we look to the left and I kind of measure out my ebbs and flows here, right? We got to move down, we got to go up, we go down, we go up, the little dance right here. I can pretty much pick out where the important levels are. And again, this is a really good practice. I'm going to delete some of this and do it again. A really good practice for you guys learning support and resistance, learning how to read the ebbs and flows of a price chart. Just mark it up, right? We teach our traders this in course number 1. I guess technically course number 2. Course number 1 is like all the basics, what's a pip, all that fun stuff. But course number 2, as we dig into price action, the first thing I tell my traders is to mark up a chart, right? Just draw out the ebbs and flows. It doesn't have to be perfect, but what you're doing is you're training your brain to read market movement because you are learning a new language. And what you'll see is as you have these kind of little peaks and valleys, you'll notice some commonalities, right? Well, look at this. This peak and this peak overlap, and so does this peak, right? And if we were to continue this back up, boop, before going down, this peak would overlap as well. Those are going to be key levels of structure, and as you get into your trading, if you're a structure-based trader, those are going to be levels to use as targets. So I certainly like this level right up here. And what we can do next to confirm that is just bring some volume in our chart and see if the market agrees. So volume profile, swing high to swing low, this entire range. And you can see, once again, we have a nice little void, a gap, right? So a free highway pretty much until we get to this 87.50 level, which is at the upper range of my zone. I just want to do one more thing. I'm curious if we get a Fibonacci retracement from this swing high to this swing low, if we get anything there. Oh, look at that, a 618, a little bit lower. So all in all, I think this is a good zone to shoot for. Now, something else that is pretty cool is we have, it looks like an equal measured move. If I take this extension to this extension, actually let's do this. Let's take the bottom of this extension right here to this extension. If I copy and paste that and drag it to this previous extension right here, look at that. We have an equal measured move between this leg and this leg. Now, one of the ways of projecting targets when it comes to pennant patterns and flag patterns is taking the length of the flag pole, which is that line that I just drew up, the upper part, and connecting it to the retracement. So if I just adjust this a little bit, just to be precise here, and I copy and paste this, let's see where that gives us. Come on, baby. Oh, it's a little bit higher, but you can see it's right around that zone. So not only do we have structure overlapping at that zone, not only do we have volume, which for some reason I deleted. I don't remember doing that, but I'll throw it back on. Not only do we have volume, right, giving us confirmation at that zone, but we have a nice harmonic pattern with these 3 equal length moves projecting a move to that zone as well. I should probably get greedy and see if there's a Fibonacci extension there as well to go along for our Fibonacci retracement. Maybe I should have stopped while I was ahead. Fibonacci extension, swing low to swing high and back down. Come on, baby. Oh, look at that. 1618 Fibonacci extension right at the top of that zone. Bang. When you're good, you're good. Quick time out before we hop back into the charts. If you're enjoying the analysis and want to learn more about how I'm finding these trading opportunities, check us out at www.tier1trading.com. Between Jason Greystone and myself, we spent over 25 years coaching traders. And what makes us different than most is we just don't give you a course and send you on your way. We actually work with you through the process. You'll learn by step-by-step education, daily live trading rooms, weekly coaching sessions, and a community that is unlike anyone else. So if you're serious about becoming a consistently profitable trader, head over to www.tier1trading.com and check us out. Next up is going to be the pound Aussie. We spoke about the pound having some strength this week. So did the Australian dollar. They're actually pretty similar. I was a little bit surprised by this. So I even created a chart here kind of tracking the two, and take a look at this. They're pretty much mimicking each other. So there's no surprise that we're seeing consolidation on this chart. Now, what's interesting about this consolidation is this. One, we are consolidating at a previous level of structure. So price has ran up into a previous level of structure resistance, and well, it has resisted. As we go down to a lower time frame, right, we have a little bit of a pullback down in this area, and then once again, just a little bit of consolidation throughout the last couple of days of the week. Now, these are some of my favorite setups to trade because they are pretty simple to evaluate. What I do when the market is moving sideways as such is this. I draw a line at the upper level of the structure. I draw a line at the lower level of structure, and I wait for price to tell me which way it's going to go. Trading made simple. But seriously, sometimes we overcomplicate things as traders with so many indicators and so many different kind of like trendy terms in the market. But if you just understand price action at a basic level, you understand that trading really isn't too complicated. Extremely difficult because of the mental stuff, but not too complicated chart-wise. So in this particular situation, I always go to the next part of analysis in my head. Okay, what if price action breaks to the upside? What if price action breaks to the downside? And because our upper line right here is so close to the next level of structure, I'm really not interested in a move to the upside. Let me just bring some volume on. I'm curious to see what it looks like in this zone. So once again, volume profile, and look at that. You can see, although the volume is smaller as we go to the upside, you can see the two little spikes right here. So it's not really lending a clear path to the way up. You compare that to the downside where we have this big void, this big gap in volume, and we don't really see the volume pick up again until we get down to about 192.20, this even handle number. So you can see, right, going to the upside is a much harder path than going to the downside. Should be, right? We never know in dear market. I'm not telling you what to do. You know I know better than that. So I'm going to lock my attention on moves to the downside. And what I would like to see is this. I would like to see, one, a break and close to the downside. That would give me confirmation of that bearish prediction. And then my personal trading style as a pullback trader means I would want to see some type of relief. So the market move back into that previous level of support, which can now act as resistance, and then look to catch that next move down to this level. And the cool thing about this is we also have an advanced pattern formation down at this level as well. So if I take my Fibonacci retracement from this most recent swing low to my swing high, this first move up is going to be called my X to A leg. That's going to be the starting part.
Sound production, take two.
That's going to be the starting part.
Action!
That's going to be the starting point of this harmonic pattern. We then look at this next move down. That's going to be my A to B. And with that Fibonacci, we can see that we passed the 50% level, but we do not hit the 618. And that's going to put me on alert for something called a bat pattern. And the bat pattern completion, if we kind of just skip past the rest of the boring stuff, because you guys just want to see where it completes at, is going to be down at my 886 Fibonacci retracement zone, which is a little bit, or right in the middle of this lower level of structure. It's a little bit lower than that 192 even handle I spoke about earlier, but you can see it's right in that zone at about 191.82. So not only does that confirm that, hey, this is a good level to look for profits at, but as a bat pattern trader, this can also be an opportunity to do a stop and reverse, which means you go directly from your short trade, flip, and go to your long trade. I'm sure I have a video explaining that. I'll link it below if you guys want to see it. Aussie dollar is an interesting one, and we have another advanced pattern formation setting up here. But what's cool about this is how harmonic the market has been moving. And when we hear harmonics as traders, we typically think of harmonic patterns like your bats and your Gartleys and your stuff like that. But harmonic movement is much more than that. Harmonic movement in general is like patterns that move in symmetry. So think about like how music has a set ebb and a flow to it. And a really cool harmonic pattern that we have here is going to be a 3 drives pattern, right? If we take a look at the length of our first retracement here, retracement here, and if I were to copy and paste this, it looks as if this second retracement is going to be the exact same length, almost, right? We say exact with a grain of salt around here. And if we look at that next move down, look at that, almost the exact same length as well. The market has been moving harmonically, so it'd be no surprise if we put in another harmonic move in the form of a harmonic pattern. And this one would be a Cypher pattern. If I take this first leg that I drew out here, that's going to be my X to A. If I draw on a retracement here, that is going to be my A to B. I need to actually draw it on a keel, my A to B. A move down here is going to be my B to C. And if price action rallies up to this level, looks like right around here, I'm eyeballing it. Let me see how good my eyes are. Ooh, so close. we are going to have a B to C leg for a potential Cypher pattern. So it looks like this: X to A to B, B to C, and C to D up here, with the zone of our bearish completion starting at the 786 and going all the way to the X leg. So we've been harmonic on the way down. We might be harmonic on the way up. And if that happens, it's going to offer a pretty good selling opportunity. Next up is going to be copper. I haven't looked at copper in a while, but we discussed it in the live room the other day, and it's got a pretty decent opportunity on it. I also think we've had about 3 or 4 advanced pattern formations in a row. I'm going to get a little bit distracted here, sorry, but bear with me for a little bit. You guys know I do this analysis kind of first time, so look at that. We have a Gartley pattern right here: X to A to B, B to C, and C to D right down there at that 786. So that's 1. It looks like we had a smaller bat pattern in here. Look at this. That's 2. X to A to B. I'll make this a different color so it stands out. B to C, and then a C to D right here at the 886. That's 2 for 2. We had another Gartley set up right here. If I take this swing high to swing low, let me just see this real quick. Yep, 618 hit. So Gartley number 3, or Gartley number 2, pattern number 3, X to A to B. Let's give it another color once again. B to C, and a CD completion right here at the 786. So 3 for 3 so far. And if we look closely at what we're currently doing, we have yet another harmonic pattern setting up in the form of a Cypher: X to A to B, B to C, and a CD completion down here at our 786, with our zone of completion going from our 786 to the low of our X leg. So I bring this up because it's super cool. Patterns tend to form in periods of consolidation. We've been consolidating here on copper for a little bit, and we've had a Gartley winner. We had a bat winner, followed by a Gartley winner, followed by a second Gartley winner. And I hope we can get one more in the form of a Cypher winner. Now, what's cool about this is, from a fundamental perspective, copper is dealing with some things right now. One, it is reacting to the US-Iran war, just like a lot of the commodities are. But apparently there's also this really bad storm going on in Chile, and that's having a major effect. Now, I don't know a lot of details about it. I'm just hearing about it for the first time, so I'll dig in a little bit deeper after I'm done recording this for you guys. But if you are a copper bull and you think that the fear and the disruption of supply from this storm is going to drive prices down, which is what we would need to happen for this Cypher to complete, you're going to be able to get involved at a discount. So take advantage of it. This could be one that works from both the fundamental perspective and the technical perspective at the same time. Now, earlier in the video, we spoke about kind of what the market looks like as it comes to the end of a cycle, and the Aussie yen is a great example of that. I may be out of line here, but I think it's safe to say that we've been in a bullish trend, yes. But as you can see, a few things have happened. One, this most recent extension is a really shallow extension, right? It just barely clears the previous new structure high. And then after that, we have retraced, we have failed to extend, we have retraced, we have failed to extend, we have retraced lower, little lower low, lower close right here. That doesn't technically invalidate the trend, but it is a good sign of a potential reversal. And then we put in that complex pullback, just as we spoke about before. Now, we haven't violated this level right here, which is what I would want to see to have complete proof and confidence that a bearish trend is likely to come next. But those are just my rules, and you may have different rules. So if you are someone that is projecting a short, we've got another potential Cypher pattern that is going to put you in line with that prediction. I'll do this quickly and just kind of draw out the end product of it. But if we take a look at this swing high to swing low, that's going to be our X to A. Our first retracement is going to be our A to B. Our extension down here would be our B to C. And once again, if we move up into our 786, that is going to be our D completion, giving us our short opportunities and a chance to trade it down as a Cypher. Or if you're looking for a bigger play, hold on for a longer move. Next up is the New Zealand yen, and I want to take a peek at the weekly just to kind of show you what this pair has been up to and the consolidation that it's been in. With that being said, you can see for 3 straight weeks, we've seen Kiwi strength and we're coming right back up to our previous structure highs. Now, that's going to be important because as we go down to the daily, you can see that we ended the week with 2 days of indecision. These 2 candles right here that have bodies in the middle and wicks expanding up and expanding down, those are going to be called doji candles. Basically, they are stalemate candles. The way I interpret that is that the market is having a think, it is taking a pause, the bulls and bears are pretty much even, and we're going to get a decision on which way the market wants to continue in the near future. Now, with that being said, it is important to understand that we have not gotten up to the main zone of our structure. That's going to be right here at this green box. So there is still potential room to the upside, and I'll show you exactly why that's important. If we go down to our lower time frame here to 4 hour, you're going to see an interesting combination here. One, we're going to see a loss of momentum pattern coming up on New Zealand yen, where price action is working its way up. Again, we're seeing divergence here on the RSI, which is a good sign for reversal. And then we put in this nice little retest where price action comes up, gives us an extreme, we retrace off of it, and then we come back up to test and hold for a second time. Now, normally, this would be a very good entry opportunity, but because we have that overlapping structure right up here, which is going to be a more important level, I do think it's worth taking more of a cautious approach here. And we can handle that cautious approach in 2 ways. One would be, I guess the aggressive cautious approach would be putting a sell stop right down here. So that may be confusing for some of you guys because when you hear stop loss, you're used to it as being kind of the place that takes you out when you're wrong in a trade. But a stop order can also be used as an entry in the market to get involved as price is going in your direction, right? So if you can imagine like the market being like a train, right? If a sell stop is pretty much as this train comes across, you're latching on and you're going for the ride with it. So a lot of breakout traders will use this technique. Now, the next question we want to ask is if we're likely to go lower, then where are we likely to go lower to? And the level that really stands out for me is going to be this level right here. I should use my box. There we go. This level right here, just because it's the last retracement that we had. Again, if we measure out the ebbs and flows that price went to on its way up, we came here, we came here, we came here, we came here, we came here. That's a horrible drawing, but you can see where my pivots are. There's one pivot at the high here. There's one pivot at the low here. This is a nice little zone to take into account. Now, something else we can do is we can look at volume and see if volume gives us any clues within this zone. So once again, my anchored volume profile tool, and I've been trying to do a better job of explaining it, but there is a video dedicated to this as well. I will leave it once again in the description box below, but I want to take this entire range into account from this high right here to this low right here. And we can see that there's not really a lot of volume in this area. We have a small little spike areas right here and a smaller one right here, but it really doesn't pick up until underneath that 94 even handle around 93.5. So you can maybe even be aggressive and shoot for a little bit of a lower level there. Regardless, the point is you would be looking for an aggressive short to trade a breakout down to those levels. Now, a more conservative approach to this aggressive trade would be what's called a 2618 opportunity, and essentially it's just waiting for a pullback. So instead of selling, I'm about to say buying, selling when price action breaks this level, you wait for price to break that level. That's your confirmation. And then you look for a pullback, and then you have that opportunity to trade it lower from there. And there are pros and cons of each. The pros of the sell stop is that, hey, if price action breaks out and goes straight down, boom, you're involved. The con is if price action breaks out or gives you a fake break and then comes back up, you're screwed. For the 2618, the pro is that, hey, you're going to get involved in a much cheaper price and you're going to get confirmation because price confirmed the break of here and we retraced up giving you that cheaper price. The downside is if price never gets up there and just goes straight down, you never get an opportunity in the trade. So there's no best way to trade anything in the market. Everything is a give and a take. And that's why matching your trading style with your personality and your philosophy in the market is so important as a trader. Next up is the loonie, the dollar Canada. And we're going to start on the higher time frame and work our way down just to give you some perspective. Dollar Canada has broken and closed above a major level of structure here on the weekly. And we are working our way back down to our previous levels of structure right here. Once again, doing the little drawing tool game, we go down, we go up, we go down, we go up, we go down, we go up. You can see the two little pivots that align, a good level to look for. We can also see that we have another even handled number right in the mix there, 139 even. So let's just mark that as it may become important later. But what we should be looking for here is a pullback trade, right? So price is pulling back into that zone. And you can see that as we approach the $1.40 level, that psychological number, we're already starting to lose momentum as the slope is getting more gradual and the candles are getting smaller. So we still have a ways to go to wait for this one. We can see the RSI is massively oversold as well. We also did what's called an RSI swap where we went directly from overbought to oversold. We also have hidden divergence, which I know I spoke to you about regular divergence earlier, and I'm a little bit afraid to teach you about hidden divergence because once you see regular divergence, it's hard to see hidden divergence. And once you see hidden divergence, you can't unsee it, and then you struggle with regular divergence. But I trust you guys, you're educated. You will just throw this away if it's non-relevant to you. But hidden divergence is essentially this. You can see price action has put in a previous structure low right here and is working on another previous structure low right here. In a perfect world, this low should be higher than this low on the RSI because that's how it is on the chart. However, if we take a look at our chart, we can see that this low is indeed higher than that low, which is a glitch in the matrix, right? This is a good sign for trend continuation traders. This is a pullback trade, which is a trend continuation trade. So this would be a positive sign for you. And yes, in the previous video where we built that trading quiz and I told you the RSI was my favorite indicator and I can do a 3-hour session on how to use it, I've already showed you 3 ways to use it. And I still got that one more way that I'm going to show you in the video coming up this week. So yes, I know entirely too much about the RSI. But anyway, this is a good pullback trade. It's really early in the process, but something to keep an eye on as we come down to this level, looking for opportunities to continue higher. Dollar Swiss is another pair that is consolidating. You can see that we've come right to the top of this previous structure shelf and we started shelving once again. Now, whenever I see consolidation, my spidey sense, whatever, starts tingling and I start looking for advanced patterns. And you can see that we actually had a very nice one form here in the form of a butterfly pattern. X to A, swing low to swing high to swing low, long video. A to B right here, B to C, and a CD completion would hit right on the nose. We are now forming another potential advanced pattern formation in the form of a Cypher pattern. That's going to look like this. Swing high to swing low, X to A, retracement A to B, extension B to C. And if we push ourselves back up to this 786, that is going to be our D completion. But wait, there's one more. It's not a harmonic or an advanced pattern, but we also have a head and shoulders pattern, right? If we take a look at this most recent move down, that is going to be our starting point going to our left shoulder. This retracement up is going to be the start of our neckline. This extension down is going to be our head. This failed extension back up is going to be the slanted part of our neckline. And right here, we have our right shoulder. Now, how you trade head and shoulders is going to make a difference, right? There are 2 main ways. There are traders who use horizontal support and resistance levels, which means they look for a break of the neckline and they take the high part of it, which is going to be right up here. or traders who use the slanted neckline, which is going to be this dotted line right there. Now, for me personally, I like the horizontal neckline just because it's in line with my philosophy on structure, which is I believe in horizontal levels of support and resistance, and I'm not really a trend line user. Not saying one is good, not saying one is bad. I don't want to get into that argument, but whatever it is you use, make sure you do it all the time and don't be flippy floppy back and forth because there's no consistency in that. And remember, consistent analysis plus consistent execution equals, say it with me, consistent results. So we've got that setting up for you as well. Potential bearish Cypher here, a potential bullish head and shoulders, either looking like this or a bullish head and shoulders, breaking this line and looking like that. Now, speaking of head and shoulders, one more for you, and this one is still a little bit early, but hopefully you're able to see it here. We have one here on the New Zealand dollar daily chart. And again, we're at a really cool level of structure. I'm not going to draw the ebbs and I am going to draw the ebbs and flows, right? If we just take a look at our ebbs and flows here, watch this. Boom, bang, boom, bang, boom, bang, boom, bang, boom, bang. How do we know that a level of structure is important? Look at how many times it's been hit on both sides, right? So no surprise that we may be consolidating right here. Now, back to the head and shoulders. This is our starting point up here. Our move down is going to be to our left shoulder. Our move back up is going to be to our neckline. Our extension down is going to be to our head. Our move all the way back up is going to be to our neckline. And then what we're anticipating is some type of symmetrical move down here. That would make sense since we have this lovely level of structure sitting right here. Ooh, you're so gorgeous. And then for confirmation of the pattern, we would need to break and close above the neckline. Now, one bit of advice here. I would actually require a higher break and close above. And the reason for that is because if we look to the left of this neckline, we've got these two little wicks right there that represent a nice little rejection zone. So to have a clear view and a clear prediction that price is likely to go higher, I would actually want to see these levels violated, right? That 59 even handle or right around that level before I would look for confirmation of that head and shoulders and a potential bullish move. I would also say this move will still exist even if this head and shoulders doesn't form. So even if we don't retrace back here, if we were just to move up from here, that would still count as a violation of that level, and that would be confirmation of that potential bullish move higher. So yeah, there you go. Hope you enjoyed the video. I know that was a lot, but if you want more from yours truly, check out this video right over here or over there or in these two corners. Yeah, check them all out.